Hey traders, what's going on? Todd here of tradinganalysis.com and Inside Edge Capital. I just want to update you on Celsius. There was some craziness going on right after earnings, and traders didn't know what to make of it. So I want to show you that we have the position, kind of make some sense, hopefully, of the earnings. Give you the technicals, give you the fundamentals. So here's the position that we're carrying at Trading Analysis. We run an active opportunity stock desk that carries anywhere from 10, 12, 15, 18 positions, and we're moving in and out constantly. So this is a holding that we have, and this is the position size we have on the desk. I also own Celsius in the wealth management business, sit inside Edge. I own it personally, and actually I'm out of it right now. I asked my wife to get some at the grocery store. I hate being out of Celsius, so hopefully she gets it for me. But it's pretty good. All right, so let's get into it. Again, here's the earnings, and here's the report. We came out and they missed revenues. I'm going to explain what's going on. And then it rallied back. This is the after hours. We had our stop at 68 with members at Trading Analysis. Didn't get triggered because we don't do stops in after hours. Came back, and then this is the day session after. This was a couple nights ago, sold off a little bit, rallied back. This is last night, and then here's today's session, breaking up through 84. So position looking good. Longer term, here is the technical chart, and I do see this as way forward. We'll come back and I'll give you where my projections are after, but I do want to look at what happened during earnings. Okay, so if you look at the expected revenues for this quarter for Q1 of 24. It was $355 million on earnings $389 was expectations, and then we're looking to make 19 cents a share. They made 27 cents a share, but the revenues came in light at 355. So the stock sold off pretty good, as you just saw, on that because they missed revenues. Well, why did they miss revenues? We'll explain that in a sec. But if you look at the year over year, so Q1 of 23 came in at 259 million. And we just reported 355, which is 36% growth in revenues. Amazing. EBITDA was a 87.98, compared to 48. Oh, so there's the beat there. They beat the street by 21% and the 80% year over year, right? So they beat the street by 20 and then 80%, 80% growth in EBITDA. And then if you get down to margins, they also beat on margins. Street was looking for 17, came at 23.39, beat the street by 619, and then quarter over quarter change was also 642. So big beat there in margins. And then EPS reported 27 cents, and the street was looking for 19. And then this quarter last year was 13 cents for a growth of 100%. So companies really, really growing. But why did they miss revenues? Well, here's the deal. Pepsi is their largest distributor. When they got that deal, stock went crazy. Well, what happened, and in the Celsius, this is their actual report that they issued, Q1 of 24. They refer to this buildup in inventory from the largest distributor, who is Pepsi, where first quarter of 2024 inventory days on hand declined versus the fourth quarter, resulting in a 20 million impact. Where first quarter of last year, 23, benefited from an inventory buildup of 25 million. So they in Q1 of 23, Pepsi bought a lot of Celsius on hand, and then they reduced and had inventory draw in Q4 versus Q1, which that was a big reason to hurt revenues. And there was also a little bit of a back and forth in terms of securing them as the primary sports drink in sort of a non-compete. And I haven't gotten to the bottom of that yet, but there was a little bit of back and forth that I think impacted those numbers with regards to Pepsi. So it was really an inventory build that was the reason that they missed on those revenues. And I think the street is now realizing that, and everyone's realizing that Pepsi's going to need to replenish, especially as we're coming into the summer season. Okay. So if we compare against Celsius, and I want to flip over and let's look at the technicals over here on Celsius versus Monster. Okay, relative rotation graph, monthly on the left, weekly on the right. Here's a percent change of Monster versus Celsius. And I'm going back to the beginning of 2022. Okay, so Celsius in that time is up 234%, where Monster, which is like one of the decades or 2 decades best returning stocks in the S&P, which is crazy. And if you look at the rotation here, look at the move. Celsius kind of hanging out over here and outperforming. Monster's leaving, outperforming, leading, going down into weakening. And then we kind of hang around a little while. And then all of a sudden, February of 24, Celsius rips, goes way out to monthly leading as well as weekly leading, backs off a little bit, and basically Celsius is on the right side of the weekly, monthly RRG, and Monster's heading out the wrong way right here. And we're not even doing much over here on the weekly Monster. Compared to where Celsius is, it's pretty significant. Yeah, we're rolling over here a little bit, but I'd like to see if we can get a little bit of a hook here in Celsius, head back up into weekly leading in a good direction. And I think the move up here on the daily wave 4 completion is going to allow that to happen, keep us in weekly leading, okay, and keep us moving higher, okay. Now, just turning back to the fundamentals, like you look at Celsius. Okay, so here's Celsius revenue. And if you look right there where it says 331.24, this guy, I know there's a lot on the screen in blue, the 355, those are the 355 million in revenues. But if you look at the expectations for growth, 422, 493, 445, and then up to 500, 600 million in revenues, where Monster's also growing. But if you look at the percent change of year-over-year growth, I mean, Celsius is running, at the very top, 166, 98, 94%, 95%. And then we're settling down into 28. You look at the green line here, and then, we're actually looking at increase in percent change of revenues. So if the company is settling into 30% revenue growth a year, I mean, that's significant. And the rate of change of revenue increase it looks like it's going to go up. And that's what analysts are looking at, which we care because that's how institutions allocate money. And then there's the Monster revenue growth increase. So you can kind of see where I'm going with that one. Okay, so back to this, from a technical point of view, I do think this is wave 4. The big hurdle, as always, for wave 5 versus 4 is going to be the 786, which is going to be a 90.159. We're trading 84 3/4. So that's going to be the big breakout. If we can get 91.59, you're looking for the 1272, 110 into the 120s, and then we've got upper channel resistance, which, based on our position, we will be protecting up there into that zone. All right, guys, I hope that helps. That was a very quick look at Celsius CELH inside of 7-8 minutes, and check us out, tradeanalysis.com. But I wish you happy Thursday, Friday, and markets are interesting in here. We just updated longer term, big picture, quarterly, monthly, weekly, long-term 150-year charts, 100-50-year charts on the Dow, S&P, NASDAQ, which only has 40 years of data, and the Russell. We just updated that at Trade Analysis. Interesting longer-term stuff happening here. So check us out. All right. See you guys. Take care. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis or fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.